Hey everybody, welcome to the Patty G Show. I'm your host, Patty G. We are here with Trey Williams of JRE Private Equity. We're going to learn about what in the world private equity is, what in the world you can do to get involved, and also his story as an entrepreneur of how he got here, what he's been up to as of late, and just all things relationship building and the sorts. But before we get to that, I want to give a big shout out to our wonderful, lovely sponsors that make this show possible each and every week. Falaya Real Estate, Currency Bank, Government Taco, Horizon Financial Group, Mallard Bay Outdoors, and Mercedes-Benz of Baton Rouge. And without further ado, man, welcome to the show.
Thank you for having me, man. Happy to be here.
Absolutely. How are you, man? Happy Tuesday.
Doing great. Yeah, Tuesday, everything's wonderful.
Yeah, that's it's beautiful weather. We're getting into the hotter part of the year, but you know, it's South Louisiana. It's to be expected.
That's a fact. That's a fact. It's blazing out there.
So, what is JRE Private Equity, man? What do you do with it? Who are you, first and foremost?
What do you do with it? Well, the first question you said, what is JRE Private Equity Group? And
yes.
You know, I think that's a good question because I think a lot of people know that. I've done real estate for 15 years, and people look at me and they think real estate or they think restaurants because I did a little bit of stuff in the restaurant industry for a little while, but for the most part, I've been in commercial real estate. So I think a lot of times people look at JRE Private Equity and you say, what does that mean? Well, I don't know. He's in real estate. He's a broker or a real estate agent who's trying to sell my building or something like that. And that's not what we do. They say private equity. Well, I mean, they're a shark trying to buy my business or something like that. It's not that either. Basically, we're a commercial real estate focused private equity group. And the term private equity just means that we go out and raise investment from the public, from private individuals, and then we take that equity and invest it for them. In this case, we invest in commercial real estate, and obviously, you know, the purpose of the investment is to make them a return on their investment. So that's what we do.
Gotcha. So I want to take a few steps back about a year or two or a little bit more and kind of get your origin of how you kind of got involved in all this. I mean, nobody wakes up one day and say, I'm going to start a private equity group without having at least some history of a knowledge within the field in which they're going to do it. Because there are some private equity groups that do buy businesses, right?
Right.
They do buy different things. It's not just limited to commercial real estate.
Correct.
So how did you get involved in the real estate game?
So real estate was something that I was always interested in from really from college. I went to LSU for MBA school, and while I was there, they did not have a concentration in real estate, but they had 3 or 4 classes that were real estate finance,
concentrated.
real estate appraisal. And I mean, I literally asked them, if I take all of the real estate classes, will you put on my diploma that I have a concentration in real estate? You know, because you could get an MBA with a focus in accounting or economics or something like that. And they said, sure. So
wait, they spelled it out in your on your diploma?
Yeah. It's so just as a concentration. Yeah. Or they let me use that as a concentration. So an MBA with a concentration in real estate.
See, something's up with the LSU Business School because my diploma says Bachelor's of Science. So I've got one in accounting and one in entrepreneurship, right? They both just say Bachelor's of Science. It doesn't say Bachelor of Science in accounting or Bachelor of Science in entrepreneurship.
Well, maybe the MBA is different. I'm not sure.
Maybe.
So
I don't know. I'll have to talk to somebody over there.
So I came out of that, and Wesley Moore, who is a local appraiser in town, he came to speak to our class about appraisal, and I came up to him afterwards, and I said, hey, I really like real estate. I'm interested in this, and I want to get into real estate, and I want to be a developer, something like that. And he said, well, if you really want to get into real estate, you need to get into appraisal, because if you can learn appraisal and you can learn how to value properties, then you can pretty much do whatever you want. So I actually went to work for his firm, Cook Moore and Associates. So Tom Cook and Wesley Moore are the principals there. And I did appraisal for about 1.5 years with them. I actually ended up marrying the daughter of Tom Cook. She's my wife.
Coincidence?
Hey, look, this happened years and years and years after I had left his office. We maintained a great friendship, and honestly, Tom was kind of like a mentor to me, and still is, and now he's my father-in-law.
What better way to repay him, right?
Well, exactly. So I did commercial appraisal for about 1.5 years. Realized that wasn't really for me, and I told him that I wanted to get into brokerage. So I ended up going to Ladder and Bloom Commercial Real Estate. I spent, the better part of 15 years at Ladder and Bloom, even through my foray into the restaurant industry. I maintained my license at Ladder and Bloom and actually always maintained an office there. So I continued to be a broker, and at one point, as I said, I got into the restaurant business.
Okay. So
I know.
Let's back up a little
Strange
bit.
transition.
Let's back up a little bit. You're appraising at this point, right?
Well, it was appraising, but then I got into brokerage. So now I'm selling.
So now you're selling.
So now I'm selling and leasing buildings.
So now you decide, let me throw on an apron. Wow.
Sort of. That's a good question. Well, look, I Ladder and Bloom's main headquarters is in New Orleans. And right down the street from Ladder and Bloom's headquarters is Couchon Butcher. And I kind of got infatuated.
It goes 2 and 2. Real estate butchery.
Couchon Butcher is a wonderful place. You go in there and you can buy, all these meats, and it's kind of like an Italian or French deli. I thought it was really cool, and I decided the Baton Rouge needed something like that. And so, I was just kind of bouncing it around. I was sitting at lunch with a guy in my office, and he said, "You know what? I've got a friend who really wants to open a sandwich shop, and you want to have this deli, and he wants a sandwich shop, and hey, it sounds like it would be a great relationship." So I ended up meeting who was my partner at the time, Chase Lyons, and he and I opened City Pork Deli and Charcuterie.
On Jefferson?
No, this was the one on Perkins.
Oh, by the overpass.
The one, under the overpass.
Yeah.
So we opened that up. It grew to, a couple of stores, and that's a tough business. As anybody that's been in it can tell you, that's just, that's a really tough business. And I had an opportunity to get out of the restaurant business. And so I sold out. Stephen, my partner, is still the managing partner over there, so he kind of maintained his role at those restaurants, and I just kind of backed out. And I'm kind of looking around thinking, well, what am I going to do now? Do I want to go back and be a broker? Not really.
So did you maintain brokerage while selling properties while you were running City Pork?
I say I did. But
if I asked you how many properties you sold, while
look, I had a few, but I really didn't. And that's part of the reason that I went in the direction that I did, because I didn't really want to go back and be a broker. I had always had an interest in on the investment side, and I was sitting in Carl Landreneau's office, who's the manager at Ladder and Bloom. Carl, I know I don't want to be in the restaurant business, and I don't think I want to be a broker, but all I know is real estate. That's where I feel comfortable.
And you know how to run a deli.
Well,
you grew to a couple locations.
Yeah,
I'd say that's pretty successful.
Yeah, but I never felt comfortable in the restaurant industry, and that's just it just is what it is.
Yeah.
It was never in my comfort zone. Real estate is in my comfort zone. I know it. I understand it. I think I can explain it. I think I can articulate it. And so I'm telling Carl, what am I going to do? Because I don't want to go back into brokerage. And he says, you need to talk to Donnie Jarrow. And Donnie was somebody that I had known, throughout my entire career. We'd known each other kind of on the periphery. And Donnie did a whole lot of developments back in the early 2000s, and really kind of made a name for himself. Started buying properties. He would put together these little small investment groups, and they would go buy big pieces of real estate. There's several pieces of real estate around town that that Donnie purchased with investors prior to him and I coming together. So Donnie had really kind of, his focus had shifted a little bit, because he's always been in the fitness business as well. So, go figure. I'm in restaurants and he was in fitness, so whatever. He was focusing.
You're getting everybody all the way through.
I
don't know. Come eat, go work out.
Exactly.
Go home.
So he was really focusing his time and attentions on regimen fitness, which is a fitness concept that he's currently growing and doing very well with it. He didn't really have time to manage the real estate side. He didn't have time to train anyone up to teach them how to do it. It was something that I was already comfortable with. He and I came together. He was like, "Man, look, there's a huge opportunity here. I just don't have the time for it." And I said, "Well, that's great, because I have the time for it.
I have the time, the know-how.
Yeah,
and
well,
and
I mean, I had the
willpower.
time, and I didn't really need to be trained because it was something I already knew and understood, and something I was already comfortable with. So I was kind of able to take the mantle that he had, started, and we said, look, let's take this and let's really elevate this to the next level. Let's turn it into something that is a. He likes when I use this term, but a legit business. Not insinuating that it was illegitimate, but there wasn't a name. There wasn't JRE Private Equity. There weren't offering memorandums. There weren't private placements. There weren't,
He would just go to lunch with some buddies and say, "Hey, I got some
yeah.
properties
Well, I mean,
you want to invest in."
it was a friends and family type thing,
Yeah.
and so what we saw was an opportunity of there are really some good properties around here, and look, we didn't invent the wheel here. I mean, we're doing what other groups are doing around the country. There just aren't very many people doing it here.
That's what I was about to say. How many private equity groups doing what y'all are doing are here in Baton Rouge?
I mean, doing what
Well,
we're.
and I guess Louisiana, because y'all are around the state.
I mean, like there are a few that are doing a form of this, and that are focusing on commercial real estate like we are. But I mean, to my knowledge, I don't think anyone is really doing it the way that we are, and really trying to grow the business and trying to expand our investor database and to. I think most of it is people just kind of doing one-off deals, which is fine. That's kind of what Donnie was doing for a long time. But we just said, look, let's have a brand. Let's have a website. Let's have some consistency in what we do. And I mean, really, from our first meeting, I mean, I realized that he had some gaps, and I had some gaps, and honestly, the two of us really fit each other. We really fit together pretty well. He is kind of more of a big picture type guy. His underwriting was usually a yellow pad and a 10B2 calculator. I'm kind of an Excel junkie.
It works.
Oh
man.
no, it definitely
It
worked. It worked. I really enjoy putting together these elaborate Excel spreadsheets, and we've got a young guy, Jacob McCain, that works with us right now. I mean, he's a wizard with that, and like we've really been able to put together. I mean, I think our offering memorandums are really like a step above what you see in the general marketplace.
So, going from being a commercial broker and doing something like this, what was kind of like the mindset shift you had to undertake? Because it's different. At this point, you're buying and selling properties to individuals or groups.
Yeah.
But now you're buying and you're buying.
Yeah.
You're not selling. You're
Yeah.
buying.
Well, I mean, I definitely look at properties differently now, and I remember sellers that I would work with in the past, some things that I would get frustrated with them on as a broker, I now understand, because I'm on that other side now. So the mindset shift was, I mean, the bigger mindset shift for me is with family, friends, and associates who, again, they just think, oh, Trey, us a real estate broker, got it. But it's taking a step back and saying, no, that isn't what I do. I'm not a broker. I'm not a broker. This is what we're doing, and explaining to them, what it is that we actually do now. So the mindset shift for me.
Nailed it.
Well, like we really have to look long term.
Yeah.
When you're a broker, you're just looking to get to the sale. And
you want that commission check.
yeah, I mean, look, you want you
wanna help-
have
you
your
wanna help
investors'
them, yeah.
best interest at heart. It's not like
Right.
you're trying to take advantage of your investors, but as the broker, your goal is to close the deal. That's the beginning for us. That's the first step for us, because not only do we have to close the deal, but we've made these assumptions, and we've got to be able to deliver on those assumptions. So we've got to be conservative, we've got to make very realistic assumptions about how the property is going to perform, or, we end up with angry investors.
I imagine some people that are not too happy to see their checks get cashed and then their value go down.
Well, exactly. So I think we take a conservative approach.
And do y'all actually manage the properties in which y'all purchase?
We do. Yeah.
Okay.
So we have so Donnie had a management company. So he and I partnered together and created JRE Private Equity. There's another gentleman, Josh Campbell, that Donnie partnered with on his property management side, and so Josh is both a partner and a manager of all of our properties.
Gotcha. And so when going down that conversation topic of managing properties, when people think of investing in real estate, their initial thought is I buy the property and then put renters in it and it makes money. But
yeah, that's all there is to it.
That's it. That's all there is, But it's not, they don't have, or I guess maybe it's not talked about what actually is involved in that managing of properties. While commercial is easier than your single home residential because you're dealing with tenant issues and stuff of that nature, there still is stuff that comes up with commercial properties. So what all goes into the actual management of these properties that y'all are acquiring?
Yeah, I mean, there's a whole lot that goes into it. I mean, it's not dissimilar from a residential single family house. I mean, if your toilet clogs, somebody's going to call you. And now it depends on the type of property. It depends on the type of lease. But in some cases, roof starts leaking, they're calling you.
You own the building.
Well, exactly. And again, it all depends on how the leases are structured, because some of them are, an absolute net lease. Usually that's like a single tenant. They'll have what they call an absolute net, which just means that the tenant pays for everything no matter what. But most of the leases that we deal with are, some type of triple net, which
what is it?
May not know what that means, but triple net means that your rent that you get. So if you've got a lease for somebody that pays $1,000 a month, a triple net lease means that it is net of insurance costs, net of property taxes, and net of common area maintenance. So those are the three nets that we typically talk about when we're talking about real estate. So when you say it's $1,000 triple net, that means you pay me $1,000 and you cover those three things. See, if you have a gross lease, then which means you pay me $1,000 and I cover those things. So leases in our business are all very, very, very different.
Yeah.
We always try to get a triple net lease, but I mean, sometimes you have a tenant who, sometimes you have a national tenant who just says, no, we're not going to do it. And you can either tell them to take a hike or you can say, yes, sir. Okay. Because I mean, it depends on who needs, it depends on if they need the space more than you need the tenant.
Yeah.
That's what gives you the leverage in negotiating these leases. And knowing that is a big part of, it's a big part of what we do is knowing that and knowing how far you can push some of these tenants to get, better rent terms.
Right. And y'all are dealing with commercial real estate. So y'all are dealing with businesses for the most part, right?
Right.
Not necessarily with individuals who may, have a certain limitation, and every business has a limitation, but you're still able to have a discussion and work out with them what makes business sense to be covered within their lease.
Right.
And also taking that into account with your Excel sheets, with your projections, with your underwriting, you have to know what type of lease you're planning to get. And so are you able to, within this real estate space, are you able to talk to the current owners and say what type of lease do you have?
Yeah.
To kind of help within that?
Yeah. So whenever we put a property under contract, or typically whenever you start looking at a property, somebody, usually a broker, has put together a package, and depending on who the broker is, or it may have every single thing that you need, and it may be worthless. Unfortunately,
you're telling me that the packages are overzealous with how the property performs?
Sometimes. And we kind of know on the national scene, like we know which brokers, are going to put together a reasonable offer and which ones we need to go dig into the leases on. So usually they'll put together a package, and if you have some interest, we'll submit an LOI, or a letter of intent, which basically just says, hey, we haven't looked up under the hood yet, but based on what we see, we think we'd pay $10 million, whatever. And then they say, okay, well, pending looking under the hood, we'll accept that. And then usually after you get an LOI agreed to, usually they'll send you you get some more information, so they'll send you the leases, and then you can review the leases and make sure that they corroborate with what the package says. And then it's just kind of that's where the underwriting process begins for us. And it's intensive. Like when you've got a shopping center with, 15 tenants, that's 15 leases that you need to read through.
And leases are not short.
And leases are not short. If they're short, they're probably bad. So
on all accounts.
So I mean, we want, you don't want a 300-page lease, but
Right.
we want a lease. You want the right stuff in there. As long as the right stuff is in there, you'll be okay. But just for instance, I mean, insurance right now, that's something that people usually don't think about because insurance is usually fairly steady. It's not right now, and I don't know how many people know this, but I mean, the commercial real estate, the commercial insurance world right now is in chaos in Louisiana.
What's happening?
Well, we've had 2 hurricanes in the last 2 years.
This is true.
And so we had a lot of carriers that pulled out of Louisiana. So like we're now looking at some of our properties that, maybe we don't have full reimbursement of insurance from our tenants. And so we're looking very carefully at those properties and, trying to figure out, if what's going to happen with those. And there's a couple of instances right now where we're trying to renegotiate some leases with some tenants to get them to take on the insurance. But I mean, I can tell you this, having a good reputation or having a good relationship with your tenant goes a very long way.
Oh my gosh.
So we're blessed to have multiple shopping centers with a lot of the same tenants in there. So when you've got, 6 or 7, TJ Maxx's, whatever, you're probably on their radar to some extent, and obviously they're on yours, and you have some kind of contact to where if you need to get something done, you can get something done. If you only have one, the odds are that you're not really on their radar. So
yeah, who's the bigger fish in the situation?
yeah, exactly.
Yeah. Are you, as the landlord, the biggest person they have to deal with, or are you just another minnow in their pond when it comes to these large shopping centers that have national chains in there?
Right. And when you've got when you have multiple shopping centers that are very similar, you develop some relationships with these tenants to where you know who to call if you have an issue.
So, are we able to talk about some of the properties that y'all have under y'all's portfolio right now?
Absolutely.
So what are some examples of properties and portfolios that y'all have already closed on that people can kind of see what is involved with JRE?
Yeah. So we kind of have, as I've said before, Donnie and I got together about 2.5 years ago and started JRE, started the private equity group. Now, prior to that, Donnie had an extensive history in real estate acquisition. So he had, Southtown Shopping Center. That's a property that we own and manage. There's a few others around town that are in the portfolio that were already part of the group when I came along. So when I came along, it was about 2 years ago. We've closed on, I believe, 8 properties so far, and about 70, maybe $75 million of total volume that we've run through. We've got everything from a 2-property industrial portfolio in Broussard with 2 fantastic tenants. I mean, that was one of our first deals. That ended up being a great one for our investors. We've got a single tenant retailer in Jackson, Mississippi. We've got one in Memphis. We've got a property in Pensacola. We've got properties in Lake Charles. But just recently, our last acquisition was a big center in Houma. So one thing that you're looking for, or one thing that we're looking for is, you want to have an anchor. You want to have a reason for people to go to the center to shop at all of these smaller spaces, but they need to have a reason to come to the area,
Right.
And that's why a lot of times you'll see a lot of smaller retailers huddled around a grocer or huddled around Walmart or something like that, because Walmart's the big draw, and then you've got these maybe you'll have some junior anchors, which would be like some smaller, large spaces, but then you'll have a bunch of 1 to 4,000 or 5,000 square foot spaces.
Yeah, you're gonna have some spaces where the tenants could rotate.
Yeah, but the driver is the anchor.
Yeah.
And typically that's a grocer. So one thing that we've really looked for is what's the anchor, what's the draw to the area, and the property that we had in Houma, the draw is Target. So our property is adjacent to a Target, but we don't own the Target. So we call that a shadow center because it's a center that sits in the shadow of Target. If it were a Target anchored center, it would come with the Target.
Right.
But shadow just means that it's in the shadows of the anchor. So we closed on that property in April. We had there's a Michael's, Ross Dress for Less, Ulta, Chuck E. Cheese. Yeah. So there's Sally's Beauty Supply. I mean, it's the same characters that you usually see that follow around Target. And again, these are all people that we have. We have them multiple places in our portfolio, so we have relationships with all of them. But that closed in April. We're already making distributions on that. I mean, that's kind of part of what we do. We're looking for properties that are stabilized and cash flowing today. So, there are several different types of classifications of properties that people typically go for. Usually you've got people that go for stabilized like us. We don't have to add value. All we have to do is maintain what's going on in order for you to get the returns that we've projected. So when you move into the value add space, which is where most of the people that do what we do, they hang out in the value add space. So they're looking for a property and they're saying, here are the returns, but we have to do this first. So there's a lot of vacancy. We have to lease it up. But if we lease it up, here are the returns. Typically, their returns are higher than ours. They're higher because you get a higher return for taking more risk. You also have a higher likelihood of losing your money. So we look for stabilized properties. So our cash flows are 8 to 10%. That's kind of what we try to shoot for.
So in that particular situation, are the properties already for sale, or are you seeking out certain areas and requesting they be sold?
So that's a really good question. And we have been very lucky in that the last 3 properties that we have acquired have been off-market deals. So the first one was actually Drusilla Village. It was within our portfolio. We had a small group of investors that owned that property, and they said, "Look, I mean, the time's right." Like,
why would somebody sell a stable property like what y'all are going to acquire?
Because of, any number of reasons. It can be, somebody's getting a little older and they just want to kind of get out. They want to cash out and enjoy their money. Or you might have somebody that says, look, the timing's right. We've been in this for 7 years. We were planning on holding it for 5 to 7 years. Prices are high, interest rates are low. The timing's right.
Yeah.
And that was kind of the case of what we had here. They were ready to get out. We love the property. We still love the property. So we put together 35 investors and we recapitalized Drusilla Village. We got a new loan. We got a CMBS loan, which allows you to have higher cash flows because they give you a longer amortization. That's been a great deal. We had a little bit of a vacancy in there. I think we're about to get it filled. That's going to be really good for everybody.
Oh yeah. You got a property cash flowing with vacancies.
Well, exactly. And so that was that was the first one. That was off market. The second one is a property that we've got this group out of this guy, and they're out of New York, and I don't know exactly how they do it, but they are just cold calling machines. They just
call everybody.
No, well, we've bought 3 properties with them, and with this guy, and he finds out what you want, what the buyers want, and then he goes and finds it, and he'll just call the owner and say, "Hey, if I can get you $15 million, would you sell?" And then they'll say no. Okay, well, hang up, call somebody else. Hey, if I can get you $12 million for your property, would you sell? And they just keep going until somebody says yes. And and it's, I don't know how long it takes for them to get a property, but we've bought 3 properties through this same guy. So he's fantastic. He brought this to us. And then finally the third one, the one in Houma, long story, but it was an off market deal. So.
Yeah. And I think that's, from a private equity standpoint, that's what the investors are looking for, right?
Yeah.
Those deals that you find the people at the right time. Like
Exactly.
you said, they're older. Maybe they're managing it themselves, and it's one of their last properties in their portfolio, and they're like, we're done. This last tenant just left, and we don't want to fill it. We'll give you a discount because we don't want to fill it, et cetera, whatever it may be. But finding those off-market deals from a private equity standpoint is like what really, I'm sure, excites investors, is because it's something you're able to get your hands on they couldn't alone.
Yeah.
And it's also less risk for them because they don't have to put up the whole bill. They just have to put up their percentage.
And so, I mean, to that point, like that, I mean, if we have a goal or a vision, I mean, that's what it is. It's to give people the opportunity to invest in something that they would never have the opportunity to invest in. I mean, even that's a big chunk of money for each one of those properties. It's not a big chunk of money when you divide it up 35 ways.
Yeah.
And so what we're doing is we're unlocking this opportunity for investors that they would normally have never gotten the opportunity to hold direct ownership in commercial real estate. So I mean, and that's a key. That word direct that's a very important word when you're talking about diversification, because people think, oh yeah, I've got real estate in my portfolio. I own XYZ REIT. Well,
so
REITs.
What's a REIT?
A REIT is a real estate investment trust.
Okay.
And they're not all the same, so I don't mean to paint with the broad brushstroke, but I'm going to paint with the broad brushstroke. Typically, your REITs, especially your publicly traded REITs, their value is based on, it is just as correlated, maybe not just, but it is correlated with the stock market. Direct ownership in real estate is not necessarily correlated with the stock market, because the ticker price for that REIT, somebody's determining that value, and it's not based on the value of the property.
So they still own properties.
So when you do that, so they'll take a much larger pool of investors of investment, say $100 million. That would actually probably be a small one. So a couple of $100 million, and they'll put together. Or they'll sell off shares at whatever a share is, and they're publicly traded, so you could buy a share tomorrow if you wanted to go buy it.
Right.
So they'll put together a large pool of money, and it's basically like a trust me thing. And look, these people have a high level of trust. I don't mean to say that disparagingly. People have a very high level of trust in these individuals, and people will gladly give them money blindly for them to go invest. They have a little bit of a competitive advantage because now they're sitting on a whole bunch of cash, so they can go pay cash for these properties. And if you're a seller and you've got this group over here, which has to get a loan, has to raise the equity, and has to do this, that, and the other, and they'll pay you, X, but this guy, hey, maybe you'll sell to them for a 5% discount because they're paying cash and they'll close in 15 days. I mean, that gives them a competitive advantage. It does. Yeah. So that's the REIT world. But the point of what I'm saying is that people think that they have diversification. What I'm saying is, talk to your financial advisor, but I would say you don't really have diversification unless you have actual direct ownership in real estate, which is not correlated to the stock market.
Yeah, we are not providing financial advice,
yeah,
nor direction as to where to invest your money. To go talk to Horizon Financial Group, one of our sponsors, and they'll be able to take care of you.
Yeah.
So, from the private equity standpoint, there is a difference between the REIT and what y'all are doing, and that has certain prerequisites to get involved.
Yes.
What are those prerequisites to be involved with JRE?
So the only prerequisite we have is you do have to be an accredited investor.
Which is what?
Which is defined by the SEC. So basically, to go into a little bit more detail than maybe you're asking for, we're putting together securities in the same way that an IPO is a security. You're putting together security. I believe they define it as any instance in which someone gives money to someone else with the expectation of a return based on their efforts. In any circumstance, technically, that is a security. And if you're a security, you fall under the jurisdiction of the SEC, and you've got to do audited financial reporting. You got to do all of this crazy stuff. They have part of the SEC code has it's Section 506. I'm talking a little bit out of my pay grade here. But Section 506 gives exemptions And one of the exemptions is that if you under 506C, which is what we use, if all of your investors are accredited and you have to qualify that they are accredited, then you're exempt from the SEC's oversight. So that means that a person has a net worth of $1 million that excludes the value of their home, or they have a income on their tax returns of $200,000 filing singly or $300,000 filing jointly for the last 2 years, and the expectation that that is to continue. Again, that's not my legal opinion. That's the way I understand it. So
that's what it's been read.
So that's the definition of an accredited investor. And so anybody that meets that criteria, is welcome to invest in one of our projects.
So finding investors, I know, can be a challenge for any entrepreneur, any startup. They're trying to get investors to fund their project. How are you able to go about and find these investors to invest in real estate?
Yeah, so it's difficult. It's difficult because it's kind of a cat and mouse game for us, because you don't know how much money so we have a group of investors. You don't really know how much money you can raise from that group of investors on a specific deal until you try. But in order to try, you can't do a test run. You're pregnant. By the time you get to the point where you're asking people for, you're pregnant on the deal, So there's this kind of,
it's a perfect visualization. The baby's coming.
Yeah, it's coming.
You gotta find somebody to take care of it.
Yeah, so we're constantly kind of playing this game of, do we go for bigger properties where we need to raise larger amounts, or do we stick with what we're doing now? And it's difficult. So we're constantly working. I wear two hats. I wear the fundraising hat and I wear the underwriting, putting the investments together. Part of the issue with me is exactly what I told you before. I think I've said it twice since we've been on here. It's the mindset that, oh yeah, I know what Trey does. He's a broker. He's in real estate. My own friends and family don't really, understand what it is that I do, because it just takes an explanation.
So how do we change that?
Well, I'm working on it. We've got it, so we've kind of turned a corner at this point. All right. So when we first started, we partnered with Donnie. Donnie kind of had the name, kind of had the reputation. We had some investors already that had already invested with him. So we kind of started from.
He had a pool that
there was a pool that was already, they were already investors, and so we kind of started ahead of the starting line, and we're at a point now where, a lot of times people ask, well, say, what have you done? Show us your portfolio. And we had these properties that had been done over the last 20 years, and they said, no. What have you done? What has JRE done? I don't want to know what Donnie did or what you did. What have y'all done together? What has your company done?
Yeah. What has Trey done?
Well, it's not necessarily Trey, but just what has the company done as JRE Private Equity? And the truth of the matter is, we started with nothing collectively as a company. We each had our own, group of friends and family and investors, and we each came to this separately, but together we didn't really have a track record yet. And we're now at a point where we have that. So I was always hesitant with doing, with marketing, because we didn't really have a lot to show at that point. Well, we've now closed about $70 million in 3 years. We've in two years. We've raised a good amount of money, all from local investors. So we're not going and getting big plugs from California. These are all from local investors. So
they're all within Louisiana and all that.
Yeah, for the most part, or have some tie or relationship to Louisiana. So we're at a point now where we're kind of changing the way that we're looking at the company. So we're starting to, JRE Private Equity. We've sort of have placed it in as a component, or as a cog in the wheel of the machine of JAR Real Estate or JRE or whatever. But I mean, we're about to start a big marketing campaign that hopefully will sort of get some of that exposure that we're looking for.
Yeah, because it's tough to get that first deal. I mean, walk us through how y'all overcame getting that first deal closed, because I'm sure the investors have the same questions. What's your track record?
Yeah.
What is your history as a company? Why should we trust in you? And for those people that are listening that may be interested in doing something, maybe not of this sort, but closing that first deal is a tricky situation to overcome. How did y'all do it?
Well, I mean, it certainly helped having independent track records and having hopefully independent reputations, good reputation with people. The first deal that we did, it was on the market, but it popped up on LACDB, that's the commercial version of MLS. We actually happened to be, Josh and I were driving to Texas to look at another property. And I was on the basin at like 6 o'clock in the morning. I looked down, this property popped up. I said, hey, this is interesting. We should pull off in Broussard and go look at this. And sure enough, we pulled off on Broussard, and I mean, it was 6 o'clock in the morning, so I waited until 8 o'clock before I called the broker. But I called.
I want to see it now.
I had my laptop. I mean, I think we put together a purchase agreement in the car and sent it over, or put together an LOI and sent it over to him. That was a tough deal. Like that was tough to put together. It wasn't it wasn't hard to put the deal together, but we didn't really know how to present it from a financing standpoint, for the bank and for the investors, because like all of our investments, our investors take on no debt. So typically, if you and I go buy a property together, most likely we're both signing on the debt, and we're both signing in Solido, which means if we go borrow $1 million to buy a building and I file bankruptcy, you owe the full $1 million, not half. You owe the full. And same thing with you. If something happens to you, you can't satisfy, I owe the full $1 million. And on our balance sheets, technically, we have to put $1 million, or we're supposed to put $1 million as a liability, even though we own half of the property. So, so that was the direction that we wanted to go. We kind of went with so anyway, long story on that, but we ended up getting that put together, kind of last minute. We got it done. And then we moved on to the next one. We had that was the property in Jackson, Mississippi I was telling you about. We started building steam. We started figuring it out, because it really, that was a different mindset. That was a different mindset of we're taking on the debt, So
JRE private equity, y'all take on the debt, or you said that investors don't take on any debt.
Yeah.
So what is that? What did you mean by that?
So they don't take on any liability to the bank. So Donnie and myself, like we're the ones that are signing the note. JRE private equity is the one that signs the note. Typically we try to get non-recourse financing where we can, because once a deal, gets big enough, you have people that are like, well, I don't know. The bigger the deals get, the more likely you are to get non-recourse financing. So that's the direction that we typically try to go.
What is the difference for those listening between non-recourse and recourse financing?
So if you default, I mean, if let's just say 3 of your tenants file bankruptcy and totally beyond your control, and it's a situation where you can't satisfy your loan payment. If you have a $10 million loan, they're coming after you personally for $10 million. If you have a loan with a traditional bank, in a non-recourse situation, they do a very, very, very heavy due diligence on the front end. Like it costs, I mean, I'm not going to tell you because it's embarrassing.
A lot of money.
We spent a lot of money on the lender's legal. So that wasn't even our legal. We had our attorneys that we paid. We also had to pay the lender's attorney to watch over the whole process to make sure that it protected them appropriately. So like you spend an inordinately large amount of money on due diligence, but they're also giving it to you non-recourse. And so, they're looking more at the property. That's really the difference. A bank,
because they're going to take the property if you default.
Yeah, there may be some bankers that disagree with me, and maybe I'm not entirely right here, but generally speaking, a bank is. I'm not saying they're not concerned about the property, but they're more concerned about whose signature is on the note.
Yeah.
Than they are about the property itself. These guys aren't necessarily concerned about the signature. They are interested in the property. If we have to take this property back, is it a good property? Can we do something with it? Whereas a traditional bank is more thinking, if something goes wrong here, can that person pay me back? So that's really the difference between non-recourse and recourse financing.
Gotcha. So to get involved with JRE, you got to have that accredited investor status. Are you able, with the way y'all set it up, have people roll like their IRAs and stuff into that, or does it have to be cash out of their pocket to invest?
So it can be done. I know that it can be done. That's again one of those things.
Consult
where
your financial advisor.
Yes, talk to your financial advisor. I do think that we have. I think we have 2 investors who have invested in an IRA. And
it just funds the distributions go straight into the IRA.
Yeah.
Okay.
And I don't know how it works, but I just know
it works the way it works.
It works the way it works. That's one of those things that I always tell people that it can be done, but I don't really give advice on that because that's, I don't ever want to get in a position where I give somebody bad advice because I'm not a lawyer. I'm not a CPA. I am none of those things.
So is there like a minimum investment required to be involved with JRE?
So our investments are usually, we take whatever amount that we need to come up with. So to use round numbers, let's say we're buying a property for $10 million and we get a 70% loan to value on the debt. So that means that $7 million is going to come from a lender of some sort, a bank or a CMBS or some type of debt. And then $3 million is the equity that we've got to come up with. So we'll take that $3 million and we'll break it up into $25,000 increments. I'm not going to do math off the top of my head. And
it's $25,000 is a minimum investment.
$25,000 is typically the minimum investment. There are times where we might up that to 50 or 100, but as of right now, it's 25. Yeah.
Gotcha. And so each individual investment is like a separate entity of sorts.
Each individual investment is a separate entity. Yes.
Okay. So they're getting, because like whenever you were talking about the REITs versus what y'all do differently is that you actually are purchasing ownership in the company that owns the property.
Yes.
You're not just buying into a group of investors that are buying multiple properties.
And there are pluses and minuses to both. I mean,
yes.
The pluses to investing in a REIT or a fund. I mean, there are also what they call funds, private funds that aren't necessarily a REIT. And I can't get into the intricacies of the differences, but a lot of these funds, you make one investment and you have an investment in 10 or 15 or 20 different properties. So you have diversification not only into real estate but also across real estate. The downside to that is you don't know what you're investing in.
Yeah. Because
you don't have a sheet that says, here are the 25 properties that we're going to buy. Again, it's that trust me thing. And I'm not saying that there isn't a trust factor there with most of the people who do this, but
it's just different.
It's just different. Whereas our investments, I mean, we've got a 40-page offering memorandum. I've seen offering memorandums from most of the groups out there that do what we do. I mean, I think that ours are as detailed or more than anyone. And the idea is that look, we want to perform on our properties the same as our investors want the properties to perform. We don't want unhappy investors. So, I mean, it is in our best interest to make conservative assumptions. We would far rather say we're going to give you a 12% return and it actually be 14, than the opposite. And so what we do is, my goal with an offering memorandum is to, as clearly and articulately as I can, spell out every assumption that has to be made in order to get to the return that we're projecting. And the thing is, most of it is what it is. I mean, it's math. Most of it is what it is. There are really only about 6 or 7, foreseeable assumptions that have to be made. What's your market? What's your stabilized vacancy going to be? Meaning, like, you don't know when tenants are going to leave and fill back up. So what you say is, we're just going to say 4% across the board, as that's going to be our vacancy factor. So maybe it's, 12% 1 year, but then 100% for 3 years, so we project out a stabilized vacancy. We say things like, these are the expenses that we project. Hey, they can go up and they can go down, but here's what they are. Here's the assumptions. So if I can clearly articulate the assumptions for a property, well, then as long as those take place, so our investors really only have to look at a couple of assumptions. And if those assumptions actually take place, then the numbers are what they are. What are you going to sell it for? Well, Here's what we think the NOI, the net operating income, is going to be in year 10, and here's the cap rate we think we're going to sell it on. I mean, those are two assumptions, and that's why we came up with that number.
Yeah, I mean, it's at the end of the day, math is math. The numbers are what they are.
Exactly.
It's a matter of making sure you do your part to ensure the numbers meet or exceed what you anticipate they do.
Right.
So I'm excited to see this happening in Baton Rouge. I'm excited to continuously see properties being closed and an opportunity like this for local people to get involved if they meet the certain parameters and they consult with their professional advisors. I'm excited to see that it's happening here, and y'all aren't, like you said, y'all aren't going to the big cities and pulling in money from there just to quickly close on a property. You're taking the time to find those investors that have ties to the community, have ties to the properties you are looking at, and want to see that impact made within their area. It's exciting to see. So as we kind of start to wrap up the show, we have a set list of hard-hitting questions we like to ask each guest.
Oh, Lord.
They're very hard-hitting.
I'm scared.
So for the first one, brace yourself.
Okay.
What is something you did as a kid you wished you could still do today?
Oh, my gosh. Something I did as a kid that I wish that I could still do today. Oh, man. That is a tough. You should have prepared me before you said that.
Like I said, they're hard-hitting questions, man.
I could probably think of something good if I had the time.
Time is now.
Let's see. What did I do when I was a kid? I could probably run a lot farther than I can now.
Surprise!
I wish I could go to the gym and do what I used to could do.
You're not the first person to give that response. But I mean, being active, right?
Yeah.
Being able to run up and down, and then at the end of the day, go to sleep, wake up the next morning, feel like $1 million.
I actually just started lifting weights and working out for the first time in let's just say several years. And it's been great. I'm really happy that I started, but I've definitely been feeling my age.
Look, I definitely understand. I had to take last week off, and I'm back in the gym this week, and it's brutal. Do leg day on Monday, and you're walking around the office, and you stand up, and you feel that pain, and it reminds you you're not as young as you once were.
Exactly.
So you've been doing real estate, you've done restaurants, now you're doing private equity. You've been around the business scene, the entrepreneurial scene for quite some time. What are 3 lessons you've learned along the way?
3 lessons that I've learned along the way. Do your research.
Yes.
I mean, that's a really good one. So prior to getting in, I did not do my research. Well, I mean, I did on certain aspects of the restaurant, more so on the cured. My fixation was on the cured meat side in the restaurant, and that was really, I did a ton of research and a ton of research of testing when it came to that. I didn't really do my research on the business and on the enterprise. I wish I would have maybe done more of that. But I did for JRE. I actually went and I met with a couple of different groups. There was a group out of Birmingham. I went and rode up there and shadowed them for a day, and I attended a few classes that talked about how to legally do this syndication because, as we explained earlier, SEC, you don't mess with the SEC.
No. Well, you can try.
Yeah. But I will say do your homework and be prepared, especially if you're going to jump off and do something, a venture of your own.
Yeah, make sure you're knowledgeable enough in the field you want to go down.
Yeah, I would say I don't mean this to be pessimistic or optimistic, but
realistic.
Well, I would say realistic. I was actually talking to a friend of mine the other day who told me that he was thinking about branching out and starting his own business. And I just reminded him. And again, I hope I'm not being a Debbie Downer here, but I said, just remember that the grass, it might be lush and thick on the other side of that fence, but it also might not be greener than it is right now. And that's, look, I'll just say you just have to be realistic with your assumptions. And that's what I meant by saying that is some people get fixated and they think, well, if I just had my own business, then everything would be great and grand. That's not always the case,
It has its benefits, but it also has its downsides.
It does.
And
it does. And I don't want to undercut the benefits because look, I'm all about entrepreneurship. I mean, we're sitting here at the
Louisiana Technology Park,
Technology
the Fly Focus podcast studio.
I mean, you walk around here and you see some really great ideas that have culminated right here in Baton Rouge. But just keep a realistic mindset. You know?
There's the rarity of a unicorn happening where you're an overnight success. Always is like 10 years in the making.
Yeah.
So what is something you love about Baton Rouge?
Something I love about Baton Rouge. I mean, look, my friends and family are here. I do love I love the food scene here.
I'd hope so. You invested in it.
Well, I mean, I did, and I remember having to explain to people what charcuterie meant because nobody knew, and it's on pretty much every menu in town now. Somebody's got a charcuterie board. But I think that Baton Rouge has really evolved from that standpoint over the last 7 or 8 years. I think I would like to think I had a little bit to do with that. My partners, my former partners, Chase and Steven, I mean, they have both got, an excellent portfolio of restaurants in this town. I'd say, kudos to them. And there's a lot to love here. I like the festivals that we have around South Louisiana. I love the hunting and fishing. I mean, that's not necessarily Baton Rouge, but I grew up in Monroe.
Yep.
I grew up north, still got a hunting camp up there.
Northerner.
Spent a lot of time up there. I love Louisiana, and I wouldn't want to live anywhere else.
Yeah, it's got a unique, not only ecosystem and weather situation happening, but also a great, unique culinary scene, great people in the area that all just have this sense of passion about making what they do each and every day just one step better. Mm-hmm. So for the final question, Trey, what can I do to help you?
Hey, you want to invest?
Sounds good.
No, look, here's the thing, man. I just want people to be aware of what I do and what we do. Because when you say I'm a CPA, people know that you do taxes. And when you say I'm, an attorney, maybe there's different flavors of attorneys, but generally you give people legal advice. People know these things. When you say I have a private equity company, people are like, what the heck is that? Like they either think, that you're like I say, some shark who's trying to like take advantage of, failing businesses and screw people out. Anyway, it's not any of that. I told you what it means. All I need is 2 or 3 minutes with individuals to sort of explain to them what we do. And I don't want to be pushy. Like I'm not trying to push what we do on anyone. If somebody hears what we do and they say, hey, that's not for me, man, that's great. That's wonderful. I'm not going to call you again. But most people don't know. And so I'm just trying to get in front of people and say, look, what does your investment portfolio look like? Do you have real estate in there? Do you think you do with the REIT? No, but seriously, I mean, do you have it in there? Because I'm not telling you to put all your money with us, but if you've got a portfolio of $1 million, like you should probably have some of that in real estate. And I think that what we do is I think that we provide. Are there other groups that provide higher returns than us? Absolutely. but the key is a risk-adjusted return, So you look at what we do, and our last three offering memorandums projected 11 to 12% overall internal rates of return. I have seen some far riskier deals that are at 15, 16. I mean, for my money, I'd rather just stick with the 12 and not take a whole lot of risk.
Yeah,
so
whatever your risk appetite is.
Yeah.
So, well, man, thank you so much for coming on the show. I appreciate your time. We're going to make sure that we link your website and the available social pages in the show notes, as well as in the social postings. So we're going to make sure people are easily able to access you. And what is, if they are interested and meet the requirements and parameters, what is a good way for them to get involved?
Call me. I'm serious. I mean, I'll give you my cell phone number. I mean, it's 318. Hey, I'm loyal to my homeland. I still got a 318 number. My cell phone is 318-355-7366. My email is very simple, trey@gojre.com. 3-letter domains are really expensive. We wanted to get jre.com, but you can't find a 3-letter domain. So we just had to add go to the front of it. So it's trey@gojre.com. Just contact me directly. I'll take you to lunch, take you to have coffee, whatever. Let's just explore it. And if it's not for you, it's not for you, but just give me the opportunity to tell you.
Well, excellent, man. I know that it's exciting what y'all are doing, and each and every offer memorandum y'all have is just getting better and better as y'all continually grow the portfolio, and you've got that history and that track record to prove you know what you know, and you know how to make a good deal. So thank you so much for coming on the show. I appreciate your time, and I thank everybody else, whether you're listening to this or you're watching this, whatever platform you're consuming it. I really appreciate it. I know the guests do as well. You're interested in JRE Private Equity, Jay put the cell phone number out. Give him a call, give him an email, let him know that you're interested, and they're going to make sure they get you involved in whatever way that they can. And I also want to give a big thank you to our wonderful sponsors that make this show possible each and every week, and a little bit more information is coming to you right now about them. Thank you all so very much for listening to this episode of the Patty G Show, brought to you by Government Taco. They're located on the corner of Government Street and Jefferson Highway. Jay is always slinging up a new taco of the month, so if you're a frequenter to Government Taco, let us know in the comments what you thought about this month's taco of the month. If you're not a frequenter, maybe trying out this month's taco might just convert you. Big thanks over to them at Government Taco for making the Patty G Show possible.
Sell your home for a $399 flat fee with Falaya. No, seriously. Falaya will list your home on the MLS and help you get all the way to the closing table for as little as a $399 flat fee. Our online platform is insanely easy to use and will save you thousands. If you're thinking about selling your home in 2022 and want to keep more of your hard-earned equity in your pocket, you need to check out Falaya. Falaya, real estate reimagined.
Thank you so very much to Mallard Bay Outdoors, the Airbnb for the outdoor sportsman. If you're looking to book a hunt or a fishing trip, this is the platform to use. They were a past guest of the Patty G Show. We got to learn all about what they're doing from the ground up. They are really revolutionizing the booking process for hunts and fish all across the country. For your next hunting or fishing experience, or maybe your corporate retreat, you're looking for something to do for your employees, book a hunt or a fishing trip with Mallard Bay Outdoors, and they will take care of you every step of the way, from organizing it with the guides and the captains to making sure you can take care of them at the end of the trip. Mallard Bay Outdoors, a proud sponsor of the Patty G Show.
At Horizon Financial Group, we enjoy helping others achieve greater confidence, clarity, and direction in their lives. We realize everyone's path to financial success is unique. Sometimes you just need a friendly guide along the way. Whether it's customized financial planning, individual wealth management, or servicing your company's retirement plan, we've got the team with the experience to help you reach your goals. Horizon Financial Group, helping you provide, protect, and prosper for those counting on you. Visit us at horizonfg.com. Cetera Advisors, LLC, member FINRA SIPC. Cetera is a separate entity.
Thank you so very much to Currency Bank, a proud sponsor of the Patty G Show. If you are looking for a business bank that fosters on three core values, relationships, service, and technology, Currency Bank is the place for you. They pride themselves on convenient, accessible, and secure online banking resources where you can manage your account balances, initiate transfers, enroll with e-statements, and more via their online portal. Between the relationships, the service, and the technology, They are going to be that partner with your business every step of the way, regardless of what you need. Currency Bank is the bank for business owners. Thank you to Mercedes-Benz of Baton Rouge for making this show possible. Nick Pentis is a past guest. We love having him on. Listening to him talk about the culture they have over at Mercedes-Benz of Baton Rouge is really an incredible thing to hear. How they treat not only their employees, but every customer that walks through the door. You are more than just a number to them. They're going to give you that white glove concierge service every step of the way. They're going to make you feel like family and take what can be a stressful time in people's life, shopping for a car. They're going to make it so enjoyable and so pleasurable. You're going to want to go back there time and time again for every new vehicle. Thank you so very much for Mercedes-Benz of making this show possible.
Complication.